recording. You beat me to it. Great. Well, welcome. I'm Johanna Miller, Energy and Climate Program Director at the Vermont Natural Resources Council. We work with a variety of organizations as part of the VECAN network, the network of town energy committees and the organizations that support them. And we're glad to be hosting a webinar today about the Vermont Bond Bank's exciting loan program that supports energy efficiency and renewable energy deployment in municipalities. Here joined by Michael Gaughan, who was the executive director of the Vermont Bond Bank. We're going to hear from Michael in just a moment, as well as Deirdre Holmes, who is the chair of the Charlotte Energy Committee. The Charlotte Energy Committee has a really exciting and successful project where they installed solar on their garage and are moving towards sort of net zero electricity wise for their buildings. So excited to dig into this topic with you all today. We're going to hear from Michael momentarily and then Deirdre, and then turn it back to Michael to get into sort of more meat of their loan program. And then we want to have plenty of time for questions and answers. So as your questions arise, please drop them in the chat and we will aim to get to all of them or as many of them as possible. But without further ado, I'm going to turn it over to Michael to sort of contextualize the program that you're offering and set the table for Deirdre to tell about their exciting success story and then have you go deeper into the details after Deirdre. So Michael, take it away and many thanks.
Thank you so much for having me, Joey, and to everyone. Good afternoon. Exciting to be here and tell the story of this great project, and also take the opportunity to highlight something we think could be really helpful for municipalities and school districts around the state. I guess as a starting point, I put our kind of cover page of our presentation up here. Only because you can see in the upper right corner there, that's a project in Heinsberg, some solar trackers from 2017 or 2018. And I just put them up there to tell everyone that energy efficiency and renewable energy projects and fuel switching are part and parcel of what the bond bank has done for at least the last 2 decades. And so with that background and understanding of the needs of communities, what we have tried to do in this moment is to go out and find more. We already have really cost advantaged financing, but go out and try to find even sources of financing that are even more advantageous for communities, and that is the story we'll tell here in Charlotte. So I'm going to give just a kind of a preview here. Part of the opportunity today is to have some storytelling about how things come together at the local level. We were fortunate we're talking about Charlotte, the town garage. We were fortunate to be part of that conversation very early on, and I think the incentives and financing structures that we had helped to allow the community to realize a really terrific end result. But here's the project that we're going to be talking about, the Charlotte Town Garage. I'll give just a tiny bit of history prior to kicking over to a local. But the existing town garage did burn down a number of years ago, and so there was a bond vote to rebuild the facility, and that's sort of where the story kicks off. And the bond bank was involved in that process from financing perspective, both on the sort of structure, the main garage, as well as the renewable components we'll talk about that are on the roof. But it's a terrific facility. We were proud to be involved, and with that, this is probably a great cover sheet for Deidre to kick off her story.
Great, thanks so much. And good afternoon, everybody. Yeah, so the story, I'll pull back a little bit further. And I feel like I need to acknowledge that the town of Charlotte and town leadership, they don't necessarily have a track record for being on the forefront of climate action. In fact, sometimes we've earned the nickname Charles No for the number of times that development projects get rejected. Nonetheless, the Energy Committee has been working on proposals and presenting them to the select board for years. I've been on the committee for 6 years, and in my time, I've been involved in two proposals to the town for full town solar. Um, Both of them were rejected. The select board was not interested in moving forward with them, even though they worked towards our town plan energy goals, as well as offered significant financial savings to the town going forward. One of the reasons that the select board articulated in both cases was a wariness, a lack of comfort with the third party investor model. They really preferred to own the array outright. In addition to that, the Energy Committee, we've also been running a campaign directed more towards residences, which we call Solarize Charlotte. And I don't know if Linda Gray is on this call, but shout out to the Norwich Energy Committee, which ran a similar campaign earlier, and we were very inspired and have basically copied it. So all to say, the idea of solar has been discussed on the forefront in Front Porch Forum in our town paper for quite a while. But at the select board level, we weren't really making much progress. And then, as was just previewed, enter a crisis. In late December 2021, the garage, which the town leases, had been leasing and houses all the equipment for the town road commissioner, burned to the ground. It was 2 days before a big snowstorm was in the forecast, and obviously major crisis. So all sorts of things needed to happen, and needed to happen very, very rapidly. The select board decided that this would be the time to for the first time, build a town-owned garage. And we had some ARPA funding available. All of that went into this project. And so at this situation, at this juncture, the Energy Committee was able to join those conversations, at every single opportunity we had, to really insist that if we're going to build a new building, it's a small town. We don't have very many town-owned buildings. So this is a very significant project for the town to undertake. We should be looking to the future, and when we're designing something new, build it fossil-free from the very beginning. Then we don't have to adapt later. And we're going to have a big roof. Let's cover it with solar panels. The solar, we were able to sort of lighten the shock there, because the IRA had the 30% direct pay option available now for municipalities. So that was really significant. So this all ended up being built, and obviously needed to happen quite quickly. The array went online on Earth Day of 2024. Not really planned that way, but we enjoyed that it landed on that day. And at this point, we're still collecting data, because it hasn't even been a full year yet, but it looks like we'll be able to cover around 70% of all the town electric meters, the current demand, with the array that's on the town garage. The funding for this is largely thanks to the bond bank. The green loan that the bond bank has available now made it within reach. At a time, I imagine most towns are in the similar situation, where they're nervously looking at budgets and don't want to add even more to the taxpayer. So it was really, and I think I can give the Energy Committee some credit for this, doing a lot of research for all the funding mechanisms and pulling it all together to a way that was comfortable for the select board. But again, I felt like in this town in particular, the role of the crisis is significant in the story. And it reminded me of this concept that I learned about early on in the pandemic, the Overton window. The Overton window, where concepts move from the unthinkable to the inevitable. And that can happen very slowly over time. But at a time of a crisis, it can actually happen quite quickly, where all the ideas that are on the table all of a sudden become options, where under normal times they wouldn't, because not changing things can feel more comfortable. Um, so I guess I want to encourage everybody to take advantage of the current crisis. There's no denying we are in multiple crises, and the climate crisis is only going to continue to be urgent, and we have political and all sorts of other crises on top of that. So if this is an opportunity to harness the crisis in order to make something happen more quickly, working with the bond bank with this low interest loan might be a good opportunity. I'll finish by saying in October, the bond bank hosted an event at the garage to celebrate the partnership and to open the garage. And we were affectionately, the Energy Committee, were affectionately referred to as the Poke and Prod Committee, which I don't know if it was meant completely affectionately, but that's how it landed for me. I sort of love the idea of being nicknamed that, and have really taken it to heart. And we continue to poke and prod with new ideas for fuel switching and expanding the town-owned solar array. So encourage all of you to continue to poke and prod, and we'll end with a quote: "Never let a good crisis go to waste. Harness the crises, and yes, and do what you can."
Thank you so much, Deirdre. It's a really inspiring story and really speaks to the role that local leaders have in making projects possible. So I really want to celebrate sort of the volunteer town energy committee and the role of that grassroots group and bringing this really exciting project to fruition. And it's my hope that your story is an inspiration and that the financial tools that Michael's going to speak to at this moment actually make it possible for more communities to tap into this unprecedented opportunity for financial support. And with that, Michael, take it away. I know you're going to give a
Great.
presentation. And please do drop
Thanks.
any questions for Deirdre and Michael in the chat if you have them. Thanks.
Yeah, and we'll get into the weeds here, but I think something about that poking and prodding is really important is that it's no secret that from school boards to local town officials, we have a lot of very complicated issues that everyone is dealing with, and a very small amount of people dealing with those issues. And so the sort of, I guess, normal course of activity that is well known, well trod, is very appealing for that reason, even though, the alternative might be more cost effective in the long run. So just, some, I suppose, sympathy towards trying to get the main thing done, which is build the garage, right? And then using that moment to take advantage of the opportunity for cost savings overall is important, but that outside party that the Energy Committee provided was really essential in that process to get a better outcome, because there are in every town that we work with, there's just a lot of factors at play, and the crisis element of here I think was particularly helpful in that both the solar and the garage itself went to voters, and that made the debt process really straightforward. We have some communities that are recognizing the fiscal pressures that their town faces, and nervous to go to voters, and sort of end up sort of bending themselves around quite a bit trying to avoid that. But that is something that simplified the process in the long run. So kind of a couple lessons learned. So with that said, let's get into the details here. As Deidre said, we did have a great event that we partnered with the town to kick off both, or to celebrate both this project as well as the Charlotte loan was funded as a pilot project that served as our ability to learn and iron out the details for a larger project that we're discussing, or a larger program that we're discussing here today. And that was really primarily is going to be capitalized on our side by a loan from USDA Rural Utility Service in the amount of 40 million, which is where you get this 40 million number from. So we were able to sort of harvest what we learned in Charlotte, we're going to carry forward all that learning and that process to this larger program. So and I love this picture that's on the upper left, not just because there's a sitting senator looking up at me, which is a bit unusual, but there's this really cool truck in the background. And so, here we have it's kind of the old and new in one picture, and that we're sitting inside of a very comfortable town garage, thanks to the geothermal heating and cooling on what was a cold day, but also obviously the heavy machinery in the background. It is a functioning garage at the end of the day. That lower left picture is what I believe is the geothermal system. I don't know anything about it, but I believe those are the control mechanisms for it. And that system, along with the related heat pumps and the solar, is what allowed this to be a net zero building, which is just incredible. Now turning the page to the numbers themselves. Total project costs, including the building construction and the solar installation, was around $3.2 million. As Deidre mentioned, there's some ARPA in this project. The bulk of the financing was from our pooled loan program, which is our very conventional program that finances everything from facilities additions and renovations to water improvements to fire truck acquisition in many cases, as those are long-lived but expensive pieces of equipment. Included in the financing is this elective pay aspect where, as Deidre mentioned, the town wished to own the PV. Historically, if you wanted to unlock the tax credits, you would have had to worked with a for-profit entity that could benefit from the tax credit. But with the Inflation Reduction Act, that became a refundable tax credit, meaning that you, as a governmental entity or as a nonprofit, file a piece of paper with the IRS and then have a refundable credit. We can speculate towards the end of this call as to what the future of that looks like. And I can tell you the latest thinking from the policy folks in DC. But in this case, the town has filed that paper or the preliminary paperwork already and is in the queue to receive that credit. Okay, so the bottom line is we want to do more of these types of projects. We want to harvest everything that's been done with the MERP work or other long-standing initiatives of towns and bring low-cost financing to energy efficiency and renewable energy projects writ large. It doesn't just have to be solar. It can be any type of energy efficiency measure. It could be fuel switching to wood pellet. And we'll talk about some of that. So a little bit of an overview of the bond bank, just to kind of orient you as to what we do. We're new for some folks, others that, particularly finance directors, know us really well. We were the first bond bank in the country, and bond banks nationally have been really successful where you have largely rural communities that maybe only do a capital project every couple of years or maybe even 10 years and have a trusted partner that's or an instrumentality of the state to help them secure long-term finance when the time comes, given there may not be a lot of institutional knowledge of how to do that. So our primary way we do that is our pooled loan program that's been around since 1970. We basically pool loans together, go out to the capital markets, issue tax-exempt bonds, and then pass along that rate to borrowers all over the state. Our bonds, when we go to market, are credit enhanced by the state. So you're getting, if you know anything about rating agencies, AAA is the best. One notch down from that is AA plus, and our bonds are rated AA plus. So it's a tremendous source of savings as well as equity within the state, in that you could be Elmore or you could be Shelburne, and you're going to get the same rate no matter the size or sophistication of your town. And then we also manage the state's state revolving loan fund for clean water and drinking water improvements. There are sometimes opportunities for energy upgrades within that program to the extent they are, either a part of facilities associated with a wastewater system, or even sometimes on top of some of the various treatment aspects. They are big consumers of energy for that treatment aspect. And then we have this sort of third leg of what we do, which is program development, and that's where this came into play. We saw an opening with the Rural Energy Savings Program from USDA and thought we can do what we're doing already in a lot of communities, but do it less with less cost. So details of the energy efficiency and renewable energy program are up on our website, but to shortcut that for everyone, here are some of the requirements. And these can be blended in with our conventional sources of financing. So like in the Charlotte example, we did the primary facility with our existing fairly low cost source of funds. And then the icing on the cake was really taking a few specific improvements and driving the cost down even lower. But in terms of eligibility for that very low cost financing, the minimum we need to see is 5% savings. That can be expressed as either dollar savings from the project or energy savings. And on that latter point, we know there's a lot of facilities that are very old. Our summers are increasingly warmer than they used to be. And there might be instances in which you're going to add a heat pump that can be a net increase in overall energy consumption, but you're doing so more efficiently because of that heat pump. And we can take a number of different calculations as to what energy savings would be, including what's called deemed savings. So, the savings associated with that piece of equipment that if you'd chosen another path might have been more energy consumption. So we have a lot of flexibility in how we get to that 5% savings number. So the bottom line is like if you have something that you think might qualify or might fit the bill for this program, you should reach out to us and we can have a pretty flexible conversation how we get to yes. Is kind of the bottom line there. So eligible activities you see on the right there, it's sort of everything under the sun in terms of commercially available energy efficiency and renewable energy projects. And there might even be things that aren't on this list that might be eligible. We just have to run them by our funders at USDA, and certainly things like battery storage are something we can finance that is has been recently approved by the folks at USDA. What I guess I'll preview some of the conversation a little bit about the federal policy landscape. We're feeling very confident in this program. It was not authorized under the Inflation Reduction Act or the bipartisan infrastructure law. It was authorized under the last Farm Bill, and even but our ability to use the program was authorized under the last Farm Bill, but the program itself predates a couple Farm Bills. It used to just be for rural utilities, and then they expanded it to units of government as well. And it does not have a mandate to, say, have electrification or use of renewable energy. You could be producing energy savings by switching, from heating oil to natural gas. We obviously don't want to see that necessarily, but from a federal policy perspective, we feel like it's going to be well insulated from some of the conversations that are going on right now, which is a sad story, but a good thing in this case. We're pretty insulated, and then I think last big thing to cover here before we get into some of the specific requirements and terms is that it works really well with elective pay because the funding is or the financing we can offer is really flexible. So if that elective payment from the IRS comes in 2 months or 6 months or 13 months after that community applies, at that time we can take in that money and reduce the size of the loan, re-amortize it so that it better fits the savings produced by the project, and just a lot of inherent flexibility built in how we can structure the loans, which is really beneficial as it relates specifically to elective pay. And then the other thing we've done on elective pay, and Charlotte may be using this, is we've signed a contract with Clifton Larson Anderson. It's our accountant, CLA. They also are the CPA for the state and the state audit, and they have a really good tax credit team. And so we've negotiated a fixed fee for them to do the work on filing the elective pay paperwork with the IRS, which as tax exempt entities is kind of new, or as governmental entities is new for municipalities. So if you're feeling overwhelmed by what the potential paperwork is, we kind of have that covered for you with this partnership with CLA, who can basically do the work for you and work through the paperwork and make sure the cost allocations are appropriate. So in terms of what we need to make these loans, once you kind of have your own scope of project put together, it is very flexible, as I mentioned. So we're willing to use a number of different sources to um, sort of underwrite the energy or cost savings. One can be your plain vanilla energy audit. Um, and we can also work with I know some of the MERP assessments were preliminary, um, working on sources to get with the state energy office to explore energy audits. But even with that initial assessment, we can work with that because we can also rely on deemed savings through Efficiency Vermont's technical reference user manual. So we can, kind of look up the types of equipment you might be installing and hang our hot hat on those deemed savings. And of course, if you're working with an ESCO, if it's a larger project, that's something we can also rely on very easily. But as I keep mentioning, we're pretty flexible here. We do need to document in some way at the beginning of the project what the anticipated savings are going to be, and then do require that you have some reporting to us after the project is implemented as to what the actual experience will be. But most of the time, that's just going to be energy bills, and things of the like. So it's a fairly easy verification process. So moving to the financial aspect of this, after going through some of the requirements, um, the only downside of this program for the time being is that the term of the loan cannot exceed 10 years. And hopefully, there's so many giant things to get through in DC. But Senator Welsh, who attended our event, has been a proponent of this program and has proposed language to increase that up to 20 years. But at least for the time being, it's 10 years. How we've tried to offset that is to get the rate on these loans as low as as absolutely as low as we can. And so where in how that sort of plays out is that you might have some you might not have tons of savings in the initial years of the project, but then you at the same time you're amortizing that loan, that cost of the project more rapidly, so your upside once that occurs is much bigger than it otherwise would be. So we've tried to sort of, from a cash flow perspective, make people neutral on the term of the financing by making the rate really low. Um, I'm just going to walk down these to explain what they are. Closing costs, we do have a small,
Michael, can you make it a little
yep.
bigger?
Can I make this bigger? This is also available on our website at vtbondbank.org energy.
Thank you. No worries if not, but just
There, is that better?
yes.
Okay, great. A little pixelated, but it is up on our website. The closing costs, this program is amazing because although we capitalize ourselves and our source of financing is a federal source, we don't have any of the usual federal cost escalators such as Build America, Buy America, which is difficult with electric components, or prevailing wage or Davis-Bacon requirements. The only real hard requirement we have is to do an environmental review, and we have a consultant on team. She looked at the Charlotte project. She writes us an opinion basically to say that this is what's called categorically exempt from any federal requirements. And the majority of the time, you're going to have an existing building, renovation, or adding solar to the top. The only time when we're going to run into issues with this is if you had like ground mount solar or something that's going to be moving dirt around. But we'd probably steer you to other places for those types of projects. Um, Generally, this will be fairly pro forma, and these projects won't be in need of any more significant environmental review other than to say that, listen, this is not, there's no environmental issues with this. So we've got the consultant lined up. It's a fairly fast process, and we can give an answer very, very quickly on that. But that is literally the only federal requirement that this program is uh, is subject to. So, just going through these quickly, monthly repayments, you can draw down the loan as the project construction period goes, or we can just reimburse you for costs of the project that you might have financed or funded elsewhere. It's very flexible, no prepayment penalties. So as that elective pay credit comes in, you can pay off the loan. We look at the requisitions on the funds to make sure that it's to make sure that it's consistent with the project is. The security can either be a general obligation, as was the case in Charlotte via the bond vote, or it can be what's called appropriation type of arrangements, such as lease purchase contracts or installment purchase contracts, anything that's allowed under state statute under the special alternative financing of assets provision. And generally, that needs to be what's called personal property. So, like things that might be attached to the wall, but you could, and theoretically, pick up and move, including things like HVAC. Um, in terms of covenants, they're really just around that measurement and verification aspect that I described. We want to see, how the project is performing. If it's, way off on savings that were expected, might require some commissioning to see what's going on there, and that's really to the borrower's benefit. Um, so why don't I move then to I'm a little bit hesitant to go into elective pay, but I'm going to use 5 minutes for those of you that haven't heard about it yet. It was a change that occurred with the Inflation Reduction Act. Historically, you had to enter into a fairly complicated tax partnership with a private entity where you would pay a certain amount for your power or the production, and then they could benefit from the credit as an entity that otherwise has to pay federal taxes. The change here was to give you a refundable tax credit so that you could own it. It is one of the things that's been targeted by the Trump administration. However, it is an act of law, so there would be, from a legal perspective, there will need to be a change to the law in all of it's obviously a very slim Republican majority in the House for the elective pay credit to go away. And we're going to see how that plays out. Clearly, EVs are something that have been targeted quite explicitly. Um, as it relates to the elective pay tax credit, it's really based on it largely mirrors the investment tax credit or the ITC that's been around for a very long time. There's a lot of bipartisan appeal to that. There's a lot of red states that benefit from that. Texas is one of the largest renewable energy producers in the country. And so I'm maybe Pollyannish, but I'm very optimistic that that will stay around. The other thing for this purpose of this program is it we can't do rolling stock with it, so we couldn't even finance EVs with it. It needs to be stuff that's attached to the facility in one way or another, like solar. So EVs for the purposes of this program at least are less of a concern. But the bottom line is generally with the elective pay credit, you are going to be eligible for 30% as a baseline, given the scale of projects that we're talking about. And the scale of projects we're talking about in Vermont really won't be subject to some of the other requirements under the IRA. In terms of having domestic content or certain wage requirements, just because we'll be under a megawatt of production, and as it relates to municipalities, most of the time under 500 kilowatts. So that's a really short overview of this. You'll have this, and if you have more questions, obviously we're here to talk to you. And then included in this package is a description, narrative description of our Charlotte project, just as a reference for you. But with that, I will finish up. Here's our contact information for our crew here at the Bond Bank. We're small, but nimble. Probably the best person to start with is our loan officer, Ken Lingy, whose contact information is on here. So with that, I'll open it up.
Thank you, Michael. And are those slides, did you say, on your website or something that you could share afterward that we
Share
could?
these with you, Joey. We do have basically everything that's included in the slides is up on the website in a different format.
Okay. Yeah, if that's easy to share as a PDF, we can push that out to people in case they want to dig in more deeply, or if you want to drop the URL in the chat. But yeah, if you have questions from Michael and Deirdre, one question from Scott, Scott Murphy to you, Michael, is do the bonds accessed through the bond bank have a prepayment penalty?
Yeah, for this program, definitely not. You can refund them or refinance them at any time. There are more conventional programs. There is a period that, keep in mind, we're typically financing 20-year, 30-year assets. Our terms sort of match those of the municipal bond market more generally, and we've done work to move this in, make this as short as possible. But generally, it's about 8 years in which you wouldn't be able to prepay. And after that time, we can work with you should that be something that's a priority for the community.
Great. Michael, I'm going to assume this question is for you as well. Explaining the difference between the Vermont Bond Bank and the Municipal Bond Bank, and to the degree you can, the different projects each could support.
Same thing. We changed our name a couple years ago to better reflect who we serve. So up until 2022, we're the Vermont Municipal Bond Bank. We're now the Vermont Bond Bank.
Okay.
We felt like we were leaving school districts out, who are a huge part of what we do.
Very fair. How much is the flat fee for elective paperwork assistance? Maybe more of a barrier for very small towns and larger towns. Can the fee be rolled into the loan?
Yeah, generally it's going to be about $8,000, and yes, that can be rolled into the cost of the loan. So you would essentially pay that off over 10 years.
Okay. And Michael, just a moderator's prerogative, please keep questions coming if and as you have them. A question for you, and then I have a question for Deirdre. Question for you, Michael, which is, you mentioned the Municipal Energy Resilience Program. If there are projects that municipalities had identified, I'm just curious if you have any recommendations or advice to communities who may have projects they've identified through that program, or in general, recommendations for sort of setting the stage for enabling this at the local level, like tips for making it happen.
Yeah, and I know our kind of primary audience are energy committees, so I think Deidre's example of showing the administrator or the manager what's possible from early in the project development in terms of sources of financing is really helpful. And if we're involved early in that discussion about how to implement the things that were identified in MERP, we can look at the projects and sort of look at what our sources of financing are and help optimize the right package to say, all right, let's pull out, these 5 things, and then we'll finance them with this program. And then these other things we can finance with this program. And on a net basis, you'll be better off. And your lender in both cases will be the bond bank. And very simple in terms of the relationship that you need to be cognizant of. But we can only do that if we're involved early on in the project development stage.
Right. Is there a minimum maximum on loan amounts?
Yeah, probably should have put that in here. That number still has a little bit of asterisk on it, but right now we're targeting only loans over $100,000. There is some administrative burden with sending out those monthly payments. If we get a year or two down the line and we've had a lot of success with funding loans, then we'll probably lower that limit. But for the time being, under over 100,000, and there's no maximum limit till we run out of money. So anything's possible.
That's great. And Deirdre, going back to you, just sort of any further final thoughts or further thoughts on communities who might be interested in pursuing a bond bank loan? Like, how do you sort of set the table for that? Any tips or recommendations you would make in terms of collaborating with your select board, or others who make decisions like that?
Yeah, I think just awareness of its existence, and the flexibility and all the opportunities to work with various funding programs simultaneously. I feel like the bond bank has done right, has really reached out and is connecting the dots. So has done a lot of the research and the homework for select boards already. So if they don't know of this funding option, I mean, that's an excellent opportunity for energy committees to just, you don't even have to know all the details, right? But just that it exists and encourage town leadership to explore those options. Um, if there are, I have a question actually for Michael, if there aren't any others, and
There are
also
a couple others, but go ahead.
oh yeah. Well, you mentioned school districts, and that's something that we as a town energy committee have felt a little bit stuck. We would love to work more with our school and our school, yeah, just opportunities there for energy improvements. But since consolidation, it seems as if the town and the school have become really disconnected administratively. And within town and the select board has a tendency to say, oh, they belong to the district. We don't have much oversight anymore. So, what would you suggest as the best way, or how are you connecting with school districts, and what can energy committees do to pass this information along and and encourage these types of projects at the school district level?
Yeah, well, that's a great question. There's a huge opportunity with school districts. Uh, One thing that stood out in the school facilities assessment that is a great starting point for looking at opportunities in schools is that something like 7 million square feet are in heating oil in the state. And that's a huge, huge opportunity, obviously. And so it's the same conversation that we have with we're sort of, other than the $100,000 limit, we're agnostic to the size of the project and willing to talk to anybody. And so I think a big part of that conversation is, a lot of schools have a ton of deferred maintenance. And obviously, we've seen all over the state the inability of school bonds to pass. But the more support they have, they're oftentimes sort of gaming out where the municipality will, what their capital needs are, when they're going to go to voters. And if the two can work in lockstep and realize some mutually beneficial outcomes, such as cost savings, that's a real win. And we can certainly do exactly what I've described with the schools. And because those projects are a little bit bigger, we're looking at other sources of financing to help drive down the cost. Those sources of financing are more at risk with the Trump administration, but nevertheless, we are have even a kind of a broader sphere of what might be possible with schools. So I guess the bottom line is help us get in the door and talk to them about optimizing the financing for their particular project.
All right, a few more questions. From Cheryl Brinkman, are towns still able to take advantage of these programs if we already committed to other bonds for fire trucks and other municipal equipment?
Oh yeah, yeah. There's very few towns that are anywhere close to, I mean, it's a bit of a hypothetical, theoretical question as to what your borrowing limit is, but certainly given the nature of this program being focused around cost savings, these oftentimes are things that are what we call self-supporting, and that the savings or the production might offset the cost of the debt finance. So even more so than other projects, they can be additive to existing capital project initiatives.
That's great. All right, a couple of questions I'm going to smush together related to the MERP program. Can a town pursue a project that goes beyond its MERP assessment and, for MERP grants? the town could pursue it only if the recommendations from the MERP assessment. Town could pursue only recs from the MERP assessment. With the bond
Oh,
bank,
for the
can you do more or different? Can you do things?
Yes. Yeah, we can be expansive as you want to be. Obviously, it's not grant financing, it's or grant funding, it's financing. But one example is something like a new roof replacement, whereas that may not be necessarily depending, right? That may or may not be part of the energy efficiency project. We could sort of isolate that from the energy efficiency improvements that might be identified in MERP, and then use our other more conventional programs to finance that roof part of it, and make sure if you're going to go into that facility and do work, you're able to be efficient about it, given you've mobilized resources to do the work.
Excellent. This may be the last question. I want to offer it up to Michael and Deirdre if you have any thoughts too, but any advice for a community that has built a solar array expecting to apply for elective pay and now faced with a level of uncertainty? You spoke to that a little bit, Michael, just sort of in this landscape of uncertainty. Do you have advice related to elective pay in particular?
Yeah, do your initial filings as soon as possible. So get on the clock with the IRS now, and just be really timely about all your paperwork. Because the more of a track record you can establish that that is committed in some way, it's a tax credit, so it's not subject to um, either authorization or appropriation in the federal budget. It's supposed to be more or less by right, but obviously games are being played right now. But to the extent you can get on the record as soon as possible, that's the best advice, and be timely. And obviously, we have a resource here to help you with that. So let us know. And even if you already completed a project and you either used alternative finance, or let's just say you paid for it with funds on hand, that's still a project we can put into this program to free up that cash on hand. We can sort of refinance it, if you will, to free up that cash on hand, and then that would allow you, access to all the resources that we bring to bear. But my general advice is get the paperwork in as soon as possible, and that also maybe what I'm a member of Government Finance Officers Association. They have a strong lobbying team in DC, and really what they're saying is like it really does require an act of law to change the elective pay credit. Now they might delay that credit. The administrator might work to delay the payments on that, but that's where having a flexible source of financing to wait that out is pretty helpful.
Deirdre, any final thoughts or to that question or in general? Just want to invite you to sort of offer any final comments.
No, I don't think so. If I can be helpful to anybody else, happy to. I'll put, we have a website and can be contacted that way. I can put that in the chat. But otherwise, thanks so much for this opportunity.
And thank you, Deirdre. Thank you, Michael. Final question for you, Michael, and then wanting to offer you the opportunity to have any final thoughts. Michael, how much of the available funding is committed already?
Yeah, we have plenty to go around. I think we've got projects in the pipeline that are highly likely to close within the next 5 to 6 months, of about $6 million. So that leaves, quite a bit of room to help folks out. Although I will say that obviously the sooner you talk to us, the better. There could be a large school project that comes in that could eat up a lot of that availability pretty quickly. So sooner the better.
Okay. Michael, can you do me a favor and drop the link to the website that you mentioned with all the
Yes.
resources? That'd be extremely helpful. And I just wanted to say a huge thanks to you, Michael, for all you're doing, for your time today, and proactively for the follow-up and support you're going to lend many communities. Tapping into this program, that'll be very helpful. Look forward to being a resource. Deirdre, same with you. Thank you so much for the work you've been doing in Charlotte, and that's really exciting to hear your success story. I hope it's inspiration for others. To the degree we can be helpful, please continue to lean in. I want to say a huge thank you to my fabulous colleague, Evelyn Seidner, who helped put this whole thing together. So this is all a big team effort. Lots of uncertainty in our midst these days, but continue to lean in. We'll be bringing you another webinar 2 weeks from now on the state of solar. So lots happening and lots to continue to lean into to make good progress for Vermonters and your communities. So thank you so much again, Michael, Deirdre, Evelyn, everyone for your time today, and enjoy this beautiful snowy day. Stay safe, stay warm, and look forward to looping back soon. And yes, don't let a good crisis go to waste. Appreciate that. All right.
Thank
Thank you
you.
so much, everyone. Have a great day.
Thank you. Bye-bye.